Let's get started. Good evening, guys. Ken at Tortoise Capital. It is the nightly strategy podcast for June 25th, 2020. Some really good work today. We were expecting today to be an interesting Thursday because Wednesday was a big surprise directional move. So let's remember what that was like. I'm really fond of this color blue now. It's like it's infantry blue. So yesterday was the big sell-off day that came down, broke through the Bollinger Band mean, was threatening all parts south. And so the reaction to that is the one that makes today interesting, because you would expect to see a lot of volatility right at the open as people who came home yesterday in a state of shock then put some panic orders in and stacked them all up for the open. I would have expected a larger gap than we saw, but we didn't get one. So that was surprising. But it still set up some very nice hybrid frogs from the open. So a fractional gap down, sold off in the morning, and then ground its way north all day, and then had a very strong close at the high of the day, which is, let me zoom in a little bit here for us. So it closed near the high of the day, and get my magic arrow here. So closed near the high of the day, and it closed right at the lower skin of the dragon, and you'll notice that the dragon, which had been sloping downward, reversed today. Not so much on the strength of today as on the fact that we dropped off a really weak. Day 11 was really bad. So when you take off a large range day that finished way down here, and then you replace it with a price that's up in here with less volatility, you get a little bit of healing. And so the way that healing starts to manifest is that you'll notice the dragon, which had been sloping down, now is sloping up. So the dragon extension is now favorable. The RL, the 10-period regression line is still basically flat, and the RL price remains here at 308.9, so 309. The upper skin of the dragon, 310.5. Lower skin of the dragon, which is right where we closed, 307.5. So the high of the day, the lower skin of the dragon, and price, all of that in this nice tight cluster right here. Closed above the Bollinger Band mean, which is still sloping up. That's good. The low of the day remained inside the river, so it only fractionally got below yesterday's low and then reversed pretty quick. So it found support around the RL90 and found support above the RL270. So that's kind of a 1 ATR move off the low to close very strongly. So we need to see one more of those to be able to get through to the upside. The RL10 price, the spine of the dragon, which is right here at 310.5, the upper skin of the dragon at 310.5. The spine of the dragon is here at 309 essentially. The RL10 peak, which would be like a emerging dragon, if it is able to close above that, get above that, that's at 311. Then the weekly high is up here just below Z1 at about 315. And then as we look at this cluster up in here, this is really strong resistance up in this target area, because we have in one tight cluster. We have the weekly high from Tuesday. We have the Z1 Bollinger Band. We have a PSAR, and we have a 10-day high, and then we have the peak of the dragon. When we look back here, the peak of the dragon occurred back here at this price. Peak of the dragon occurred here. And then the PSAR itself, the PSAR, flipping point right there at 315.5. So if it can get through this nice tight cluster, then everything is kind of free and clear, and we would look back in retrospect, and we would say, yeah, this sell-off here at the low, if this low of the day holds, and then everything starts going north, we could reasonably say, yeah, this low was higher than the previous excursions down here, and then this will become the new 10-day low in the future. And so that would be, healing. That would have negated all of this harsh sell-off. It would have given us half of that sell-off, but then recovered. So that's sort of the test right now. To the downside, we have the low of the day, the RL270. Actually, I'm going to start with, if it opened here, the support levels would be the belly of the dragon at 306.3, the Bollinger Band mean at 305.6, the RL90, the low of the day, the RL270 fair value, the 10-day low, and the Z1. So that's really this 10-day low's got a hold. That's going to be good for one more day. So tomorrow that's going to be the 10-day low, and then thereafter, today's low is going to be the 10-day low. So that really becomes, in my view, a really important price level, because yesterday it sold off harshly. That was another test. See, the previous test were these 3 days back in here, where there were a couple runs down to the bottom, and it got deeper. Whereas now there was just this one test, and then already a recovery day. So if this 10-day low, if today's low holds, and that becomes the new 10-day low, then it looks more like this. And then we've seen the first turning point already with the dragon slope starting to peak up. It's going to take a while for the RL90 extension, which is now still sloping down, to turn back up, and it'll take, the RL10 is going to have to power through that PSAR before it flips. So we've really got 3 to 5 days worth of grind for those indicators to flip. Now, I'm not saying it can't do that. We've seen some powerful one-day moves over here. On those days, there were some strong up days in there. Like, for instance, this one went from 296.5 up to 307.5. So that was a $9 move. That's a 3%. That's what a 3% move looks like. That's 1.5 ATRs. This is like a 2% move. That's 1 ATR. So we'd have to get 2 ATRs really to power through that cluster, which is really this week's high, the previous week's high, and then all of these resistance levels. So to me, that 316 area is really decisive. So what that means to me then is this area that I'm going to highlight in this darker shade of blue, this entire region in here is all tactical trading. There's an opportunity to see some tactical gains short term inside this space, but it really has to get through that PSAR flip before it really becomes, before I would call that like a green. It would have to get through all this up in here before I would consider that to be great news. So if it can get through all that into the green, then it's free and clear. And then if it gets above the 30-day high, and we're up above 323, then it's all systems go. So I think there's a grind in the blue, free running in the green, and then if it gets above that, then it's all gold. Okay, that's how I'm reading that. Meanwhile, as we frame this thing in the other direction, we are still below the dragon. The dragon had rolled over and is now still slightly, basically flat and slightly sloping up. But the RL30 has rolled over. So all it would take for this to be a short entry would be, in my view, price to get through this low of the day. So that's where I would pick up the swing trade to the south. If that, I'm just going to treat that like the future 10-day low that it's going to be pretty soon. That'll be the 10-day, barring something weird tomorrow, that'll be the 10-day low. I mean, it wouldn't be weird for that to be taken out tomorrow, but that's the area where I'm going to pick up a swing. From right there. So I will be tactically trading inside the yellow zone, just trying to get intraday turbo trades and make some money. But if it looks like it's going to go through 301 at that red dot, then that's where I pick up I think that becomes a decisive move to the downside. And then that gets reinforced if it breaks through these next three lines. The RL270 fair value, the 10-day low, and the Z1. Then it's free and clear all the way down. Come on now, Kenneth. Then it's free and clear all the way down to Z2 and the previous dragon belly, because there's no support levels inside that no man's land, right? So tactical trading in the yellow zone, I would pick up a short swing bias at 301 if that gets violated at the red dot, and I would be looking to reinforce positions at the fair value and the 10-day low and the Z1. So this is where, so if I was just trading the S&P directly, I would be looking to get the second position short here, probably a third one short, somewhere around in this area, and then a fourth one just down in here once it had really cleared the Z-1. So that's my traffic lighting for that downside. And I would be looking at, where would I pick up the swing orientation? I think this is what I have to be in a swing orientation there, don't I? I think so. So between the red dot and the green dot, this is primarily day trading. I think actually what I would do is, that's where I want my second position. I think if it breaks above the dragon, that's where I'm gonna pick up a swing orientation to the upside. I want to get in a little bit sooner. But I will be much quicker to add positions to the short side, whereas that's about where my first swing and my second swing would be. Yeah. And then the third swing position, not until it gets above the 30-day high. So I have less belief in the upside on this one. So that's where I want the third position. This is where I want the second position. something like that. Because then we will have cleared the RL30 and the RL10 peak, and then that's an emerging dragon. So we would have enough money in hand to be able to afford that third unit of risk. Yeah, so I think that's what that looks like. So yellow intraday, blue leaning towards that swing and grinding. And I'd like to see that tomorrow. That would be nice, because then that would tell us maybe guys were willing to hold the position over the weekend. So where this thing closes, I'm expecting some fireworks in that last 2 hours of the day tomorrow. So I would be least surprised by a directional move early to start testing in either direction. Don't know who's going to win that one, but you could imagine how if it could open where it closed today, and then guys, the bears might try to make a run at this and push it down, and then make people panic and get out of positions over the weekend, and then in the last hour or two buy some quality on sale. So I could see a tactical run to the downside. How would I handle that? A hybrid frog right from the open, like I always do. And then what would it look like to the upside if they were going to try to early to see if there was any way they could panic people into buying, so that you could get and then if it closes well, then people would say, oh, it recovered nicely. See, it had a higher, and this little test down here was only 1 or 2 days, and it didn't get as deep as it was over here. So we want to own it on Monday, so they might make a run to see if they could get people to buy on Friday with a strong close. So that's kind of the way I see tomorrow, as being a tactical large direction day. And I would not be surprised to see whatever the dominant direction is in the first 5 hours to get reversed as people unwind the leverage in the last 2 hours. So if you've got a good position intraday in hand by like 2 p.m. Central or 2 p.m. Eastern, 1 o'clock Central, don't lose that. Keep those. I'm still planning. My plan would still to be basically flat over the weekend, unless I could get a good long and a good short to kind of offset each other. But I'm not planning on holding things over the weekend. I really want to exploit large directional moves tomorrow and make bank, because the market is still sideways normal. And today didn't even recover all the losses from yesterday. And we're still the RL10, that 10 period regression line is still, which is the best fit for the last 10 days. This thing is still, look at the endpoints. That thing is as flat as it can be. This is as critical state as you could be going into a Friday, before the weekend, with a large move in either direction. So this could go from 307. It could go. Let's see. It could go 12. It could go $10 tomorrow. This could go from 307 to 317, meaning it could go as high as that, like on a range stat move. And that means it could also go as low as that on a range stat move if it just opened there. So that's sort of that's the limits of the move tomorrow. Bracketing wherever it decides to open. That's what it would look like for tomorrow with range stat moves. Yeah. So as soon as if it starts selling off in that yellow, I'm thinking short, and really going to try to make bank on that, and then not carry it over the weekend. So that's what I want to say about that. So let me ask, just in the comments, let me know if that more of a detailed framing on the market is helpful for you. It seemed to me that um, we've got to do a better job of remembering what that market condition is like so that we can quickly start exploiting the tactics of the day on the next day. So when we're in a critical state like this, that's the kind of day that it was Wednesday. Look where we were Wednesday as an example. You know, today, Wednesday was back here, right? So this big blue dot was the Wednesday critical state, and this is the second big blue dot is the current critical state. So we haven't really moved that far in the last 2 days, although there have been some directional moves. But Wednesday was a small range doji in the middle of the dragon and had a big surprise move. Today was a directional move up, but it's brought us right back into that middle zone. You know, the 10 RL is flat, and we're in the dragon, and there's a large move available in either direction. So yeah, don't be surprised by that kind of big move tomorrow. Or I'll really be sounding like a jerk. All right, let's find out what we did today. Okay, here's the S&P, basically 1%. Nice. DIA was a little better at 1.1, IWM at 1.4. So that's not surprising. What else was better? Let's see. So Japan was a little better. Real estate, materials, Microsoft, big tech, XLK, Apple. ExxonMobil, Wheaton at 1.6, Cliff, and here's a nice cluster of steel. Cliff at 1.66, US Steel 1.7, Nucor at 1.8, silver at 1.9, Alcoa at 6%. What was it? Amazing today. Devon Energy 4%. Finance strong 2.65. Tesla 2.6. So and Brazil 2.1. So there was lots to choose from. The metals, which had been beaten down, held support and had big intraday gains. I still don't believe in them. Still miles to go before we sleep. Plus one, if you remember the Robert Frost poem that one is from. Miles to go before we sleep. So the fact that XLK was leading the way was confirmatory. So Microsoft and Apple still doing well. What was worse than the S&P today? Healthcare was a wash. Asia less Japan. It's a cluster of some of those modern tech leaders, the new wave, Amazon, Facebook, Google, underperformed. Still in the green, but underperformed. Mexico, treasuries were up a fraction. Into the red, there was lumber. Let me start all the way down at the bottom. Those two little speculative plays, their IPOs and Groovy, these are the kind of stocks that a lot of the little Facebook trader ads that you see, that's the kind of things they specialize in. So that's okay. That's good to know that. That's why I study them. If people are slinging a ton of coronavirus money at them and day trading from home in the retail trade, unskilled, man, I love that. Part of me hates that for my country, but as a trader, I love that. So Beyond Meat is these are the guys that do the vegetarian substitute for burger patties, and they look like they're starting to get some traction. And then Nikola Motors is that alternative to Tesla. Win, Simon Property Group. Twitter, to me, is the interesting one. Long term, I really believe in them for a number of reasons. They have less advertising and censorship because they only have 288 characters. So they are the closest thing to the actual government that we have in terms of the voice of the people. And it's not as larded up with censorship and social engineering like Facebook and Google are. So Twitter is lagging behind those other guys. It was at 33, heading to 36, on its way to 40, but it has just not followed through. And it's back down around 31. So I just am treating that as an opportunity to buy something that will be a generational leader in tech at a better price. So I'm, as a value player, longer term, I'm looking at that one. Intel, McDonald's, and Walmart all underperformed. Walmart continuing that disappointment. That one just looks like a commodity to me. It's like soap, you know. You got to have it, but nobody is proud of that, I guess. So Simon Property Group down a fraction in lumber. So lots to choose from. Again, a good range. And the big thing that I take away from this was that when push came to shove in the metals, they pretty much responded pretty well, and XLB responded pretty well. And then the tech leaders dominated. I want to run to the daily report first. Okay, the upper half. So, sideways normal. So that is why I am already deciding today that I'm not going to be holding swing trades unless somebody just hits me over the hammer tomorrow, over the weekend. Right? So I'm just not gonna do that. I'd have to get kicked in the head by a mule, which could happen. So I was researching horsepower today for some reason. So that's 33,000 foot-pounds an hour, meaning if you had a 1 pound weight, you could move it 33,000 feet in 1 hour. That's what a horse can do. So a reasonably healthy man can generate and sustain 0.1 horsepower, 1/10 of that. Horses turn out to be the optimal land animal for horsepower to weight ratio. The only thing better than them is a mule. The mule is as strong as a horse, but lives 50 years, is less startled than a horse, and will eat anything. So horses will often have that fight or flight. So a horse has a flight syndrome. It just instantly defaults to just running away. So it can be very nervous. Donkeys, on the other hand, freeze. But it turns out that when you breed them, that mules become wiser. They actually have a more sophisticated flight. They actually are judging what's going on. So they're not as stubborn as donkeys, and they're not as flaky as horses, or nervous as horses might be. Plus, you have to feed horses the equivalent of premium gas. You have to feed them oats, and you have to carry that with you. So the overall net cargo that they can pull is less than what mules can pull, because mules can forage and horses cannot. So a man can generate 1/10 of a horsepower. So I was doing the math on that today and using that to inform my workout regimen every day. Because I'm doing the exercises where, 3 or 4 times a day, I do high intensity burst so that I get the oxygenated and then the nitrous oxide dump, which invigorates your blood, gets rid of free radicals, and promotes clarity. So for the leg exercises, 1/10 of a horsepower is this. In 1 minute, I set up I have a 55-pound dumbbell or a kettlebell, and I set it on a milk crate. And I straddle that milk crate and I grab the kettlebell with 2 hands by the ring. And then when I stand straight up with it, it moves the kettlebell 2 feet. So when I pick it up 2 feet and then lower it till it hits the milk crate, I don't hurt my groin or lower back. And so once 1 cycle per second, lift and drop, 1 every second for a minute. That turns out to be 3,300 foot-pounds, which is 1/10 of a horsepower. So horses can maintain that rate for an hour. That's how cool horses are. And mules can do the same thing. Usain Bolt generated 3.5 horsepower in his 100-meter world record dash. So you can surge, but it's hard to maintain that. Horses can just do that continuously. So when you're looking at water power and systems, when you go from horses to steam engines, they use that as the equivalent. So what they would typically do was raise water up into a cistern to store it for energy. And you were pumping water into that storage area. So they hooked the horses up to pumps and then had them pull like for 10 or 15 minutes and then swap them out. They would work one, and then you'd have a team of 10 horses. And then by rotating the horses, you could maintain continuous effort. So an engine has to replace 10 horses to be useful to the village. Anyway, horsepower, sustained rate of work, and then maintaining the engine. And then using that energy in a power takeoff lever so that you can apply it to other systems to actually do work. So that's what we want to figure out. How much cognitive energy are you generating every day? How is that power getting applied to the wheels? And then how are you driving it? Are you getting traction, or are you just spinning your wheels? Or is that just generating heat? It's not connected. It's not going through a transmission to the wheels to do work. Are you just generating heat and light, or are you generating work? So I'm judging myself by that standard. It's not very good. So I'm working on that. So today we're at 46 on the 3-day cycle, above average in the multi-time frame NDX. So the panic selling did not occur today. You'll notice over on the risk Z that it rolled back up. So we're now into the spring. Today was tentatively, we're getting close to the point where I could actually start thinking about swing trades. When I add that, though, to the sideways normal, it would have to be an amazing move for me to hold a piece over the weekend. I'm not opposed to that. And my leading candidates for that would be in the materials. That U.S. Steel, Nucor, or Alcoa. I think that's where I would look. Why? Because they came down and double tested that 10-day low, and they've had 1 day of recovery, and they're at a really attractive price. So like U.S. Steel's around 8, and it was up at 10.5. So that's a 25% sell-off. So if today was strong and tomorrow is any good, that could actually be good news for over the weekend. So I just talked myself into being ready to hold a swing trade in the best performer of Cliff, Nucor, U.S. Steel, or Alcoa. And if they're all doing well, I'll just own XLB. That's the logic chain in play, getting me to a strategy, getting me to a trading plan. Okay? So I will be sure to study that one carefully. Everything else looks normal. No signals and channeling overreaction under the 10-day max pain and min pain. Apple has fallen off of the 10-day min pain. So we got Nike, United Health, Microsoft, Walmart, and Merck. So even though Walmart has been underperforming, it's been stabilizing. So that might actually be one I could talk myself into as a value play. Man, that would be crazy. Crazy like a fox. 10-day max pain, Boeing, American Express, ExxonMobil, Nucor. Yay, Nucor. Steel. And then in the S&P 100 stack there, Simon Property, Devon Energy. So they're not really in the S&P 100, but I replaced a couple other symbols because I wanted to see how they competed against the large caps. So that's cheating a little bit. That's a modified S&P 100. The secret is out. The Dow Tactical Summary, I'm noticing Pfizer and Home Depot on dojis. Those stand out because they are the exception. On the left, I'm reading from left to right. A 5-day down in Johnson & Johnson, and nothing else on Johnson & Johnson except it's a 3 on RSI2. And I don't talk about that much, but I hope I have Johnson & Johnson on here. I probably got rid of it. I did. I work really hard to try to keep that stack to just one page without scrolling. So as I add things, I try to take some other things off when they fall off the radar. So here's what Johnson & Johnson looks like as a 5-day down. If we can get that on the screen. Oh, come on, work with it, brother here. Not cooperating. All right, we will defer that. Back to the salt mines. Lots of 551Ws today. You see in the stack when it comes up on your screen. So when there's lots of 551Ws like that, that means it's normally a market condition, and that would mean that the entire market kind of made a turn. So for 551W, we'll remember, we'll scroll down and take a look at that. That is a 551W swing system. It is a relaxed form of the triple screen. And so, is a shock on here tonight? He asked me this question. Yeah, so Ashok asked me a reasonable, simplified question. Hey, why do you spend time looking at the mechanical swing signals when all we really need apparently is the 1 minute, 30-minute, supported spring crossings and all that? And my answer was, I want to stack up every advantage that I can. I want to have an unfair advantage against maybe the overly simple. And so here's a case where when something is in a 551W, that means it has a better than usual probability of making a strong directional move to the upside. The first hint that that would happen would be a continuation of the 1 day of gains that it makes. 551W means it's higher than it was 5 weeks ago, lower than it was 5 days ago, and today the one was a white candle. So that it's the first day of recovery after 5 days of weakness. So if we can get a second day of gains, now it feels like the 5-week up is starting to be more important than the 5 days of selling. So it's like a relaxed triple screen in that sense. What we're really trying to get is this idea. So it's up for 5 weeks. down compared to 5 days ago, and then up. And then, so that means today was a white candle. So if it takes off and continues to go up, it'll go back and test the 5-day high. And then if it gets through that, it will go to the 10-day high. So now we get the opportunity for 2 scoops of gains. Well, when you see a lot of things firing on that kind of a signal, it tells you that probably the whole market is in that condition. And it is. So if we see a positive move through yesterday's high, we're out of that yellow zone into what I drew as the blue zone. That's going to be very favorable. So all of the symbols that have that kind of quality are postured for larger than normal moves. So I want to know that. I also want to come over here and look at something like Boeing and say, oh man, Boeing, even though it is a 551W and was a white candle, it's got 3.8 to 1 to the 10-day high. So it's a great swing trade. And its RSI2 value is 3. And it's oversold compared to its peers on 1-day and 10-day. So there's a ton of reasons why people might look at Boeing as an opportunity to buy. And now take a look at the price on Boeing, 174. 50 days ago, that was 74. And it's now 174, but it's had this sharp pullback, and tons of investment capital from the military industrial complex are going into Boeing. So it's poised for what could be a really good short-term move. Well, if all I did was look at 30-minute charts, I might not know that. And I might not know that, all other things being equal, Boeing should really have my attention tomorrow. The same with McDonald's, the same with Intel. So when I see things that are on swing trade patterns, that gives me an unfair advantage to people who are just day trading and don't know anything about swing trading. That's what hybrid trading is about. I'm trying to stack every advantage that I can find and then simplify that into a trading pattern. So I want to pick the right symbols, and then I want to trade them in a simple manner. Ashok, did that answer your question? Okay. All right, so now we're looking at the ETFs. Brazil and gold on dojis. Hooray for Brazil. It's in the number 6 position on the Max Payne range compression, but it didn't qualify on the auto framer. But it was a doji. That's good. And look at Brazil. Way over on the right-hand side, it has 6.99% under the 1-month return. Over the last month, Brazil's been one of the top performers in the ETF stack. Would you have predicted that? No. Did you know that? I didn't until I saw the green light flash. And then like a raccoon, I go study it. Look at the 3-month performances. UDOW up 75%. Of course, it's the triple leverage Dow. That's why that is the case. And XOP, the oil exploration, up 54%, although it has been smashed on 1 month and 10-day, but today was a good 1 day, so maybe this is the turnaround point. The main point on XOP is it is a frog champion, and it can always be traded every day, no matter what else happens. It just so happens, though, that XOP and Energy are in position 1 and 2 for the auto framer and the Max Payne. So, me gusta. I like those two, plus Brazil. And then Mexico is always a winner. Hybrid frog champion. Hooray. Daily pinch and stretch up next. All the usual suspects at the top and bottom: Apple, Microsoft, Brazil, and Tech. At the bottom, Pfizer, Johnson and Johnson, Walmart. Nothing unusual there. Nothing else really to look at on that one. A ton of things still available on the auto framer. Not unusual. I'll wait for your screen to catch up, sorry. So yeah, on the pinch and stretch, Microsoft, Apple, and Tech in Brazil in column 1. Pfizer, Verizon, column 2. And not much else to look at. Next up is the auto framer. And lots of good names on here for framing swing trades. Everything on that list is frameable and useful. So I see big names like Boeing, real estate, oil exploration, energy, Pfizer, McDonald's, yay. Regression line fractals, little change from yesterday. Cisco, Apple, Microsoft, Home Depot on the relative strength leaders, not surprising. Daily squeezes, we're up to 5 now on this one. Gold, Target, TGT, and Lowe's. Looking at the 4 seasons of MACD now. Summertime leaders, tech, gold. Healthcare and treasuries are still in their spring. Healthcare now rolled into the spring from the winter today. On the Dow 30, summertime leaders there: Apple, Microsoft, Amazon, Procter, and Nike. The spring candidates look interesting to me: Cisco, United Health, Pfizer. Johnson & Johnson has some possibilities there. Maybe it's found its bottom. Multi-time frame NDX. Again, no surprises among who the leaders are there. Boeing had a breakdown today, as did Intel. I'm going to go look at Intel just because semiconductors had been leading the techs. And so for Intel to be underperforming that drastically, I don't think they're going to go out of business. So there may be an opportunity in there somewhere. And that's all I wanted to cover on. The rest is kind of market health check. I'll cover that in greater detail over the weekend. I'm going to go through some of my case studies, and then we'll hit the wrap up. So here's one in Wynn Resorts, Frog Champion, and this is what a frog looks like. And I'm going to use the big blue ball here to get through this quicker. So I went to yesterday's Z3 pinch, and that's that first yellow box. So I use that as the box for today. So I guess I should have drawn a big blue line here so you can see today's where it opened. So I went to yesterday and found the size of the that Z3 pinch box when it's not noisy, and that's about 50 cents ish. And then I brought it over, so it opened here, started selling off, it gapped down, started selling off. So at 50 cents and dropping, I make my short entry here with my hybrid frog box, my minimum manageable risk box there. That thing works. It consolidates for the next 5 or 6 south of the dragon and then collapses again. So and the RL10 is all winter. So I get a second position short. It gives me a second leg down spike and then a 1, 2, 3 exit and crossing the dragon. And I just strike. That just felt like so natural and normal. And that earns on a 50-cent risk. The first position earned from 74.50 to 72.50. So that's 4 execution and then probably another 1 here. So that's 5. So that's 1 position sizing win in the first 30 minutes. So that's half my weekly goal. Relax. All will be well. This is the Dow. This was an afternoon, so these are not necessarily in time sequence, just the way I stacked them. So the lunchtime sideways trade sells off. 1 winter and spring, and second winter is bigger. So that felt harsh enough. So purchase. Initial risk, I'm using the Ken Hum model here. When the PSAR takes out my entry, I move that up and then pick up the Bollinger Band mean. And then at this point, as it started to sell and it came down and hit the PSAR, I took half the position at the blue box or the blue dot with a sniper strike, and then the rest of it where I'm supposed to. Along the way, I put the second position in when it took out the Z3 and the previous hump of the dragon. So that's where the second, and I got that in before the next earlier hump of the dragon, or the RL10, excuse me. So second position here, it jumps up, and then now notice the pullback didn't even get through the dragon and then just resumed. So I said, yeah, why not? Third position. Then the sniper strike, why not? And then, of course, immediately regretted because it immediately reversed. But at that point, I'm not going to add because we're now in the last half hour or so, and then I just managed the exit. That one went pretty well. Brazil. Again, this is the part of the afternoon. Everything was working. So when you look at the way I have my screen showing, I'm always looking at the S&P. When it starts making that kind of move, everything else starts making that move. This becomes easy. Supported spring crossing and capture. Supported spring and scratch. Tried short and fractional loss. Stop and reverse. Second position, third position, and sniper and exit. And this was Alcoa right from the morning. So good. I should draw the little box over here, the Z3 pinch box. Let me put that in orange so you can just see it a little easier. So that's the Z3 pinch box. That's about the size of this wrist box here. So it opens with a gap down, harsh sell-off out of the Z3, reverses, comes up through the Bollinger Band mean, PSAR flipped, natural, supported spring, up, down, and then immediately up. I was slow to get the second position in, but so what? So my stop was I just kept it at the PSAR, the Ken moved it up to the PSAR, and that was now higher than the Bollinger Band mean. So I just keep that in place until the Bollinger Band mean picks up. And then I'm just tracking that thing all the way up with the Bollinger Band mean. This pulled back, held support. That's a supported fall crossing for the third position. And my stop was right here anyway at the Bollinger Band mean, so that was easy. Peaks, take half, take the rest, make bank on that much risk. That's Alcoa. I mean, geez. #1 winner today, too. Mexico in the afternoon. I mean, it just, the gift that just keeps giving. Supported spring. Crush it. Scratch it. Scratch it. Fraction. Scratch. I just keep shooting. Scratch. Big win. Missed the that second position here because we were getting late, and by this time I just had to. And I'm using that kind of lock it in, move to the Bollinger Band mean. On that big gain, lock it in, Bollinger Band, lock it in, and then sniper. Huge. Huge win. The usual in the Dow. This morning it was it offered some good plays. I was playing with Win and Alcoa, so I didn't have the attention, so I missed the hybrid frog in here. But I got the supported spring and executed in the usual way. So there's supported spring crossing. Keep the stop at the PSAR until the PSAR takes out my entry, and then just use the PSAR till it hits the Bollinger Band mean, then use the Bollinger Band mean, and gave back that much. You might have sniped a little earlier. I missed the reversal, took the next supported spring and the next supported spring. Every one of those is the Ken Hum Wu Wei exit protocol. Too easy. I already showed you when, sorry. This is the Ultra Dow. Yeah, I don't think it was the same one. Oh, I know what that was. Sorry. Yeah, this one was the, after that strike exit up here, then that became the supported fall crossing. And it was basic by that time, that had almost become an owl. And then I was just using that same protocol. This is where I would move it to the Bollinger Band mean and just picked up the Bollinger Band mean. And it came all the way down to here. So I wanted to show you what that transition between states looked like. A couple more. This was Brazil in the morning. So this is a supported fall or a supported winter crossing. So that it's basically a couple minutes in front of a collapsing dragon here. So I just got it inside here when it broke through the PSAR with the usual stop here and cash, supported spring, scratch, stop and reverse, second, third, cover and reverse, and scratch. Big win. Big wins in Brazil. Yeah, this was the Ultra Dow in the morning. This was part of that early morning sell-off. And I just wanted to show this idea here. I trade the Dow all the time, and so when I had this nice move down, and then covered here, and then took the long, and then that failed so fast that I just scratched. And then what I did was I put 2 positions on to get started. So that what that, in my mind, what that did was the first move down was the, I don't know, call it the correct move. And so when I exit that and then try long one, I didn't want to just stop and reverse because now I'm short 1 from here. So I put 2 on as if I had just never taken the exit and the stop and reverse on the greens. So like if those things were not on there, let me pull that off just for a second. Like if I had never taken those trades, that red dot is where I would want to be putting a second that's where I would want to put a second position on. So because I had stopped and reversed, if I just re-enter, now I only have 1 position short from there, and I don't get my second position till this next red dot over here. So in order to kind of get back aligned with the original better trade, that's why I put 2 on there. And then what I did over here at noon was the entire market had already started to turn. The S&P had turned, VXX had rolled over, and the Dow was lagging. And so it just felt to me like the Dow was going to catch up. So I made that a 2 initial position. So when that second green dot, that's where I'm adding essentially a 3rd position. So I was double my normal sizer. I committed 2 bullets to that one. Don't do that until after you graduate. And you didn't hear that from me. Okay. So that was me today. The SSC and the SFC, I mean, they just work. And those Z3 pinches, they just work. And when you're at work, stay at work the whole day. Because those moves that were happening in the last 2 hours, that's exactly the kind of thing that I'm looking for tomorrow. If you got to take a nap at lunch. You know, when you guys are observing, yeah, there's not as much follow through at lunch. Okay, then do a workout, get some stuff done, take a nap, come back ready to rock those last couple hours. You know, get away from the screen. Do something. Yeah. I'm trying to remember whose beautiful chart this was. This may have been Dave Rushing. Is this yours? I'm thinking I'm recognizing the style. I wonder why that won't let me. It was ink. When I was trying the Windows ink, it was giving me screen number 1, and I wanted screen number 2, so I'm going to see if this will let me put some ink on this thing now. No. Okay, we'll just use the regular crappy pen. All right, so the first one, just as nice as could be. Oh, it's in work. Right. Okay, so just a learning point there, that if you're using 2 monitors and you want to use Windows Ink to mark things up quickly, you got to go to the little Windows Ink icon on the second monitor, then that will give you the snap. Then it turns out you can have that linked to Snagit, so it lets me use the Snagit tools to do the markups. How pretty is that? I like. So the first one, he activated the sniper because it's greater than 2R and gives back hardly anything. Well done. I like this low and then this low. So now he's got this going on. There was a little fraction, that's fine. And then right away back on the horse and that's a sign of resilience and preparation. When you can take a tightly controlled stop and then immediately follow the move to the other side. So that was nice. That was nice. And notice the R multiple on that is so good because the execution risk is small. We're going to see Luke experimenting with standardizing that execution risk. I talked a little bit about that before, so that you can get something like more of a normal chip size or normal position size. But for right now, just keep doing it the way you're doing it and just track the execution arc, because you can actually program that and then trade it properly. And as long as you're trading with good portfolio heat and position risk, you're fine. Nice effort, and then immediate recovery. That's excellent. We'll just round that up to 5R. That's a position sizing win for the day. Está bien. Dave, is that starting to feel natural for you? It looked like it was very relaxed. And I say that on the basis of seeing how quickly you were cutting the losses and reversing. So that makes me feel like you're doing routine things routinely. This is Antonio's. Antonio has done a marvelous job. He's got half the hybrid trading workshop videos done. So we did 2 like 7-hour sessions on 6 and 7 June, which just about blew up our minds. But he's got the first one into a concise set of 7 note sheets with all the big ideas and then the timestamps on them. So he's done a really nice job. Hurry up on day 2. Everybody wants that. Let's see. And in my opinion, you're probably in the position to learn more from that workshop than anybody for having gone through that work, just so you know. That's a really good idea. This one is a entry here with the usual risk. I'm sorry, risk box here, and then caching. Oops. Caching this win. That's basically a 0.2, so it's 1 execution R. I think, oh yeah, you were saying you felt like you had accelerated this, and so that now you're worried about being impatient and worrying about stuff. Yeah, the fireman did his job and locked in a gain. It's better to have that than lose it, so I like it. But for the fireman to be here, then I've got to be able to re-enter right here. When it fails to fail further, see, the fireman is there to protect us in case this thing comes all the way back to where it started. But it didn't. It held here and started to go up again. So we've got to be able to re-enter here. And now your stop should be here until the PSAR takes out the entry, and then you move your stop up to the ball. Basically, you'd just be on your Bollinger Band mean the whole way, and then you would have taken this exit over here, and you would have captured probably another 0.2. Then you have for the next phase of your kata when you're doing the supported fall crossing is going to be there. But pretty good work there. All right, so this one is going to be a discussion of the difference between kata and your system. So what you'll discover at some point is that when you are religiously following the kata, as you should, he makes the note, he didn't get to greater than 2R, so the sniper wasn't activated yet. But when you get in the habit of putting that pale blue box from the highest high, your sniper might want to just say, you know what, I'm just going to, even though it wasn't a 2, I just am going to take that anyway. That would be incorrect in the kata, but in your system, you're free to develop your own sense of feel and touch. And then I'm going to say, at this red dot, we should be looking at here. Then over in here for the next phase of your kata when you're doing SFC, you got this. That's a good try right here. And then you didn't miss anything until very, very late in the game. And this move here rewarded everybody. All right. Oh, so Griff gave us a bunch where he doesn't have a lot of internet connectivity there. So what he's doing is taking snapshots of the day and then applying the rules and then posting them in a batch. And that's actually really good practice. That's very efficient use of your time. In fact, at some point here, I'm going to convert all this stuff into a standalone supported spring crossing course that I'm going to sell to the world probably for $1,000. And in that course, I'm going to give them an opportunity to come join us here if they pass the kata. So they're going to get a standalone course with none of the other stuff that we work on. It'll be one of those 2 to 5 hour courses and then just SSC. But then we're going to say, look, we get this community of practice over here, and if you want to play, your ticket to enter is you got to pass the kata. And so what that's going to be is their application to come join us so that they're not wasting our time. I want to make sure that folks that are in the chat room and asking questions and collaborating with each other are people that are committed to learning in order to respect your time. So they're going to, when the person does the kata, they're going to come in with a 12-page application. There's going to be a cover sheet. Then there's going to be 5 daily charts on DIA and 5 daily charts on EWZ with the kata perfectly performed according to the specs that Neil was kind enough to put together. So that's 11 pages. And then there will be 1 consolidated lesson learned page at the end of that. So the total package will be, whoa, come back here, pen. So the whole package will be a 12-page application, and that way we can judge very quickly if they're executing correctly. If a person can do the kata correctly, then there's evidence that they're trainable, that they can separate the rule set from their own ego, and then we can add things to it like Ken Hum's exit criteria and using the SFC. So when the SSC fails, you can flip right into the SFC, or you can expand the symbols to use. So instead, you could always just do SSC, sort of like Ken Hum does. He takes it in TNA when the market's going up on the triple leveraged Russell, or he uses TZA, the inverse triple Russell. So when the market's going down, TZA is going up, and he just does SSC. So he's always trading up and to the right, and then that gives him standard work habits. So here's a nice, this is a nice shot. I would say on this one, at some point when you see you've got that much in hand and you're almost at the edge of the river, you'll probably in the future just scratch it instead of suffering that loss. And then you take this re-entry. Now, this is a spring, a summer, fall, summer. And now notice it's easier to see if this thing was color coded with the seasonality. Just saying. Otherwise, you got to be alert for that. For the next phase of the kata is the summer, fall, summer. We know that that's an automatic reentry. This is a really nice 2 execution R win. This one is actually a spring. Yeah, because notice this was actually, it was still underneath the 0 line. And the other reason you like it is because you had a swing low here, and then you have a swing low here. So the winter, it's a very good question. The winter was not as harsh. On the other hand, you actually have some evidence that it wants to go up. So we're going to trade off some of the harsh winter for the fact that it's got a higher low in where the RL10 reversed. And you'll notice that down here in the MACD that the winter didn't get as deep. It was actually better. And so that will then allow you to get this piece. And then when we do the kata on the Z3P, you'll get that one. You'll get this one on the collapsing dragon and the supported fall crossing. And I don't disagree too late in the day. Your mileage may vary, but excellent decision making. So here's one of the ways that you can build resiliency and discipline. When you see a perfectly formed pattern, like you don't even have to accept any trade-offs or fuzzy up the line, like it is perfectly meeting all the criteria, make a decision not to take that trade. And then watch it win. And then just say, it's all right. Because there's more coming. If you can pass on a perfect trade, then you should never be in a position to anxiously take a less than perfect trade. Train yourself to be really restrictive. Like if you had a rule in poker, say jacks are better before I play the hand. Well, don't play tens. But I want to play, no, jacks are better. So well done on that one. That was some psychology. Again, perfect here. 3R on this one. 1 and 1.8 on that one. So basically 5 for the day on those 2 days. This one was the 17th, so that's 3R. That's nice. This is a blended kata. This feels like possibly Eugene's? Oops. Trade 1, perfect execution, 1.35. Second one, perfect execution of the kata, 0.5. Third one, perfect execution of the kata, 1.9. total deal of the day, 3.1, 3.7-ish. Yeah, 3.76. And that's not even using the SFC, which you can obviously see now that you're conditioned to look this way. All you can see is the SFC now too. So there was probably another, two or three are available in there on diamonds, for crying out loud. And we've already seen this one from Luke, the Aussie Ninja. All right, so well done. Tomorrow, be on your best behavior. Tomorrow's going to be another directional day. Plus, we have the end of the week shenanigans. So what I will do Friday is publish the reports and the quick summary of the day. Then Saturday, I will read the report in the weekly report in great detail, identifying all the, themes and candidates. And then Sunday, I will do the trade frame review of whatever you post in the chat room by Sunday 3 p.m. I will review by Sunday 8 p.m. For those of you in the hybrid workshop, there were only a couple Q&As to answer, but I will. But I got to defer that one to start till 2 o'clock. We're having another soccer club tryout session tomorrow, so that usually takes all morning. So I sent out a note, and hopefully the email update came to you. But that's going to start at 2 Central rather than the normal 10 Central. Okay, so. Eugene, if you could do me a solid and post that as a message in the Basecamp project and send to alert everybody, that would be very helpful. Okay. All right, so that's everything I got there, guys. Well done. Keep up the fire. Keep marching.